Welcome back. You're still watching and listening to the key points on TV3, also on 3FM 92.7 and live around the world at 3news.com. So now we'll be moving on to look at the Ghana Amalgamated Trust, which was set up this month or announced this month as a special purpose vehicle intended to support solvent and strong indigenous banks to meet the new capital requirement, minimum capital requirement of 400 million Ghana cedis. Of course, the GATT, since its announcement, has received a number of concerns in respect of the use of pension funds as the basis for which these indigenous banks will be supported. We'll be looking at that conversation right here. With me in the studio to do that is Professor Gatsi, John Gatsi. He is the head of Department of Finance at the University of Cape Coast. Good morning and welcome.
Good morning and thank you.
Great.
Thank you.
So we're expecting some other panelists when they come in. We'll do the needful and introduce them, but we'll carry on the conversations now. So, Prof, before I come to you, we need to take a listen to a soundbite in respect of the Ghana Amalgamated Trust, and then I return to Professor Gatsi in the studio.
They want to offer bonds to salvage some banks, but we've told them that the final approval is from our trustees, and whatever documentation they have, they must let out. We, the trustees, have it. We'll study it. If it's good for us, fine. If not, then we are afraid we cannot partake of it. We're going to study it for other proposals that will come from other investments or whatever our fund managers will bring. We said earlier in our press release, we've not committed any pension funds to any GATT.
So that was one of the representatives of the workers' union there, particularly CLOCSAC, speaking about the use of pension funds to support GATT in its support to the 5 indigenous banks, talking about the ADB, NIB, the merged Omni Bank Ghana Limited and Sahel Sahara Bank Ghana, Universal Merchant Bank, and Prudential Bank. So we'll start the conversation with Professor Gatsi, who is here with me. Prof, when this whole thing about minimum capital requirements came, they need to increase it from 120 million to 400 million came. Several discussions ensued. We had people talking about the fact that it was difficult to meet this requirement. A group of indigenous banks, met with the president and put their challenges across. Generally, there was that call for government to intervene to help them meet, because we didn't want a situation where the banking sector would be dominated by, foreign banks and all of that. So now government seems to have intervened by, setting up GATT, which is intended to, draw from private sector, particularly pension funds. That's what we have been told initially, to support the banks. Question then is, if there was a call for government to intervene, government seems to have intervened. What exactly is it about this arrangement that seems to be rocking the boat in a certain way?
Well, I think various people have their own concern. The first concern was that this call was made very early at the time when the 400 million minimum capital was announced. I remember the Ministry of Finance and even the government indicated that there is nothing they could do, that the regulator was independent and they are doing their independent assessment. In fact, some of us were surprised. We made a lot of case as to why there was a need to support local banks. And we were not calling for any local bank at all. We were calling for local banks that are within the law, who are actually observing the requirement of corporate governance as set up in the banking law. But we were told that if you can't meet the minimum capital, go and merge.
Yeah.
If you can't merge, downgrade yourself to savings and loan. So if government had this plan to support local banks, it should have been done very early. The reason why it should have been done very early is that some of the activities going on in the banking sector is such that the more you stay on where you were, the more you deteriorate. So you allow some of these entities to deteriorate to a certain point before last minute you came up. Of course, the idea to support them is in the right direction. But why are people having concern? I think the concern is about the legitimacy of GATT. It's also about broader consultation.
Right.
People in the industry were not consulted. The Bank of Ghana, as a regulator, who is supposed to guarantee, is not able to speak to what they guaranteed. Therefore, this brought about the concern. And people who contribute to pension funds, whether the pension funds are managed by private pension funds or not, they are monies that are contributed by people who are working in both private sector and public sector. And the way pension is such that government must actually be concerned about how pension funds are managed. And that is why in some jurisdictions, especially in the European Union, every year they came out with what percentage of pension funds and insurance funds can't be invested in certain type of investment that they look at the risk profile, because government always want to protect the future of pensioners. So the issue about private pension funds does not mean that government should not be interested in, and does also not mean that these unions who talked earlier on don't have some locals to talk about the issue.
Very well. Okay, carry on.
I need to also indicate that using pension funds the way it was announced is not against the law. Because if you look at the National Pensions Act, I think Act 766, in section 175 and 176, it is very clear that when the pension fund is invested in bonds or bills or any other securities guaranteed by Bank of Ghana, which we were told Bank of Ghana guaranteed, or guaranteed by the state, that's the government, then pension funds can be invested in those investments. So I think the concern for those associations will have to be whether they were broadly consulted. But it is not inappropriate investing the pension fund in the bond that
the way they've suggested
the way that
they
suggested it.
Great. So clearly you are saying that there's they would be seen to be complying with the law in the manner in which they're going to use the pension funds, but the issue has to do with perhaps the level of consultation that went into it. But again, too, it is real. I mean, that the risks around the use of pension funds is real, in the sense that you don't want a situation where, you know, such investments would be made only for there to be, you know, a case where it would turn out to have been a very risky venture, i.e. you don't get it back, because you're looking at workers' money put somewhere for future benefits. So at the time when it becomes necessary for the workers to fall on them, on that funds, it wouldn't be there. So question then is, what are we putting in place, or what should have been the measures taking, or what should be the measures taking to ensure the efficient use of it, to ensure transparency, to ensure accountability? You talk about ownership and the fact that people feel that, well, maybe we were not consulted sufficiently. Bringing in the issue of ownership, isn't it the case?
Yeah, that is true. So from where I was referring to in the Pensions Act, where pension funds can be invested in bonds or bills or instruments which are guaranteed by either Bank of Ghana or the government of Ghana. In the announcement, we are told the Bank of Ghana guaranteed it. We are also told that the government of Ghana guaranteed. That is where the problem starts from. If you go to the Public Financial Management Act, when government is guaranteeing some of these things, it calls for approval by Parliament. So the question is whether the whole setup of GATT was approved by Parliament. I'm not sure that was done. So it questioned the legitimacy and the purpose, the real intent for putting in place the GATT. And that is why I believe that it's a matter that our parliamentarians ought to be interested in, because it is very clear in the Public Financial Management Act, the guarantee of the state must be approved by Parliament. So that is the first concern that I think we should look at.
And that's a very fundamental
very
issue.
Fundamental.
Right.
Very, very fundamental. And again, there is a concern about transparency and disclosures. The issue is that the Ministry of Finance issued a press release, indicated that don't refer to this GAT
as a bailout.
As a bailout. Refer to it as a support.
Yes.
And some of us were happy because, after all, when companies come to this country, we allow them waivers of taxes in millions of Ghana cedis. As we are talking, government is actually implementing a bailout or stimulus package for businesses.
Right.
Therefore, if you have an entity which is part of the lifeblood of economic activity in your system, it should be very easy, if they are solvent, they are managed well, to support them, not to encumber them.
Right.
But as it is now, GAT is something else. And I will start from why I'm saying it's something else.
Before you start from explaining that, let me quickly announce that we've been joined by King Ali Awudu. He is the president of the Coalition of Concerned Teachers. Good morning, King, and welcome. Great. So yes, I come to you, Prof.
So the Ministry of Finance told us that it's a support. How they define the support, nobody knows.
Yes, but on that, sorry to interrupt, but on that, I think that we need some clarity, perhaps some education. When the minister says in his statement that this is not a bailout program for banks, what exactly does that mean? Because obviously we don't expect bailouts here to be free, as in you just take it and go and spend and do whatever it is. So why the need to be at pains to say that this is not a bailout program?
That is the difficulty thrown to the public by Minister of Finance. But the point is, when you look at the GATT agreement, it's actually not a support. GATT is a commercial investor in those local banks.
Right.
And the structuring of the commercial investment agreement is just like what vulture funds or private equity funds do to take hold of businesses that are actually suffering. Why am I saying so? I'm saying so because the agreement with the banks is such that the GATT is an investor.
Right, so it's equity that has been put in.
Yes, but you are going to borrow to come and support the capital base of a bank. If you read section 9D of Act 930, it says that the capital, when you are capitalizing, it should not be borrow funds should not be part of it.
Right.
So you set up GATT to go and borrow to capitalize. For me, it's a violation
of that section 9D.
Section 9D. So why should a government do that? Yet to support the banks, we all agree they need that support. But why do you go and borrow to come and capitalize? The bank themselves cannot do that. So why do you do so?
Yes.
So that is one fundamental challenge with the entire arrangement.
The GATT arrangement.
Then the second challenge is that it is not a mere support, it's an investment. Now the investment is structured in such a way that the GATT will have ordinary share in those banks, and at the same time have a preference shares.
So it affects shareholding structure of the bank.
Exactly. I'm going there.
Oh.
And the preference share, you see, when we are discussing preference share, even though it's a share, we treat it in terms of interest. So if you look at the income statement or the financial statement, you will realize that when you get your profit, or operating profit, you necessarily have to pay the preference shareholder before you
come to the ordinary personnel.
Very good. Now, when the preference share is cumulative, what it means is that you can defer it to another period if you can't pay this financial year.
Right.
But the agreement indicates that it is non-cumulative. What it means is that in any financial year, whether you have the ability or not, you must pay those
preference shareholders.
So is that a support? Or you are putting unnecessary burden on the lifeblood of economic activity in the country?
Right.
So that is one. Then the next one is the option arrangement, that the GAT has a put option arrangement that they can sell their shareholding at any time before the fifth year. So clearly it is an American option, which means that GAT can enter through this arrangement. After 1 year, they are no more interested. They can sell their shares
to some other entities.
Yes, even though it is true that the bank have a call option to also buy. But now, these banks have scooped everything within their reach to get to the level they are before you are coming to support. Within 1 year, 2 years, 3 years. How would this bank raise money if you want to sell your shares to them to buy back their own share? That's a huge difficulty.
So definitely they can buy back. It would have to be an external.
Then you bring external person.
Right.
Now beyond that, you are at liberty to also convert your preference shares to ordinary shares. So when you look at this arrangement, it doesn't fit into the possible definition of support that the Ministry of Finance is talking about.
Very well.
So you have whether it follows the rules of establishing such entities. That is one. Secondly, the arrangement is just actually a hold on those local banks, which definitely at the end of the day, if we are not careful, may go to some private investors who are waiting comfortably there.
Exactly my point, which is something I'd want us to look at.
And before you go to my colleague, I want to use one of the banks, then so that the pension funds or our local unions who are talking, perhaps they are not looking at that side. If you look at the shareholding structure of UMB, for example, they have 3 major shareholders. We have Fortis, a private equity fund, which has about 96% or 95+%. Then you have SNIT, whose money is in SNIT? Our workers. SNIT has almost 4%. Now, holding 4% in an entity is not, it's not small. It's huge investment. Now, you hold shares in a company. Then some of the funds that these workers are contributing in pension fund, you go and borrow that pension fund and come and take hold of their investment. That cannot be encouraged.
I get what you mean, because you have a situation where the person who is holding the 4% or almost 4% is coming from the source that you coming in will be dipping eventually, which is raising that issue. I think we would need to look at the implications of the GATT arrangement on the shareholding structures of the various banks. We'll look at that into some detail, because for me, I think it has implications for management even, and the issues about corporate governance and all, which is what has led this whole banking, sector to where we are at now. And so if this arrangement is coming in with such implications, we probably need to be very careful and see how best we can get it operated in a way that would be beneficial to the whole banking sector and indeed the economy as a whole. King, you are coming from the Coalition of Concerned Teachers. Obviously, you have concerns about how your the funds of you're a member of the trustees of
the Ghana Education Service Occupational Pensions.
Very well. So clearly concerns about how the funds will be used. So what exactly is it about the GATT arrangement that gives you that feeling of, well, you're not sure about this?
Honestly, the whole thing, initially the unions and the schemes came out with 1 or 2 statements because the initial consultations and as to how the entire thing will be done was not well fetched. And announcement was made by the Ministry of Finance that, like, if you look at the press release that came from the Ministry of Finance indicating that government is going to use pension funds to support some local banks to recapitalize. It took especially we members of the trustees by storm, because we know that extremely later part of 2018 we have been informed by the NPRA that there are some 6 local banks that are solvent, they are well managed, they are corporate, wherever is good, but they are unable to raise the 400 million by the 31st December. And for that matter, the Ministry of Finance, through the Bank of Ghana, the NPRA, they want to step in to help those banks in order to make sure that we don't wipe out almost entirely all the indigenous banks, or going to add those 5 or so banks also to CBG. And then CBG will also just be growing to become another monster and all that. So we held an engagement with the National Pension Regulatory Authority on the 24th of December. After that engagement, we put before the NPRA to provide us with all the necessary documentations about the GAT so that the Board of Trustees can study them. The way the Tier 2 is structured is such that...
So let me just quickly get you, before you go on to how the documents came to you and all. Were you at any point consulted before the establishment of GAT?
That's what I'm saying. On the 24th of December, we were informed. In fact, there is a company called Algebra Securities Limited. They did a presentation to us, and then they informed us about the Ghana Amalgamated Trust, through which the SPV will be formed. But we said that as a trust, we need the full documentation on it, because I was in that meeting, but the board in which I sit on is a 15-member board. So we need a document so that the entire 15-member board can study it, so that we can take decisions as to whether, when the GAT finally make the bonds available, we will be ready to invest in those areas or not. Because wherever be the case, we are already investing in some government bonds and what have you, based on, Section 208 Clause 4 of the Act 766 mandate the NPRA to always review the investment guidelines. So NPRA can say that, okay, moving forward, invest, let's say, 20% of your funds in this entity, invest 50% of your funds in this entity. So currently, the guidelines NPRA has given, for example, is that you cannot go beyond 35% in capital instrument, like in FDs. You cannot go beyond 60% in government bonds. You cannot go beyond 30% in local government instrument. So those are the guidelines. And as the Board of Trustees, when the money comes, you allow those things to guide you, and then you do your investment.
Right.
But we need a document so that
be able to determine whether it's in line with all of that.
We will know where in these categories the GAT fits, and also what are the returns of the GAT? As a pension fund, how liquid will the GAT be? And how readily are we going to have our funds when we need it? And all that. At the point of maturity, will they be able to pay? Because as I speak to you, some of the trustees or some of the pension funds did some FDs in some banks.
You mean fixed deposits?
Fixed deposits in some banks that have had their licenses withdrawn and has been merged into consolidated bank, and retrieving the money is becoming an issue, so you have to roll it over and all that. So we need to take all these things into consideration before you go into any form of investment. And it was around 24th of December. We are left with just about 6-7 days for us to meet the 31st. But our worry was that the documentation that we were requesting for did not hit our table for consideration, and the announcement was made by the Ministry of Finance, because at least the 31st December has elapsed, and I'm thinking that the Ministry of Finance need to make the public comfortable that these banks, one way or the other, have also had some support and are meeting the minimum capital requirement or what have you. But that notwithstanding,
King,
we have now met.
We need to take a quick break. So when I come back, you continue. Sorry, please don't lose that train of thought. When we come back, you continue with us, telling us on how the consultations or the absence of the consultations went. We need to know that into some detail. So we'll take a look at that when we come back. Stick and stay with us. On TV3, also on 3FM 92.7 and online at 3news.com. We've been looking at the Ghana Amalgamated Trust and the concerns that are coming out subsequent to the announcement of the establishment of the Gatsi by the Ministry of Finance earlier this month. We do have joining us in the studio now Dr. Lord Mensah. He is a senior lecturer at the University of Ghana Business School, University of Ghana, Legon. You're welcome, Doc. It's good to have you here. So yes, I'll quickly go back to you, King. You were making your submissions regarding the level of consultations, or in fact, the absence of that, and you're telling us that you had requested for some documentation on the GATT to understand exactly where the GATT fits into the arrangements provided by, the guidelines that you have in respect of such arrangements. So please carry on with your submission. Let us know exactly what, in your perspective, was, if at all, there was any consultation. Let us know.
Okay, thank you very much. So as I said earlier, the very first official meeting happened on 24th December. But prior to that, there have been some other informal ones, but I'm not so much interested. But the very first formal, because this particular one was chaired by the CEO of the MPRA, Atakruf himself, so that was very formal. So that was when the GATT was formally introduced, and we were made to understand the reason why the GATT is going to be introduced. And the reason why the GATT is going to be introduced, we all know. To help some, initially 6, now 5, because Sahel and then Omni Bank have merged. Right. So to help some 5 local banks meet the minimum capital requirements. As Board of Trustees, we requested for certain documentations to bring it before our board for study, so that at least we will know the special purpose vehicle.
Did you get the documentation you requested?
As of now, we've not gotten it. Okay. The explanation given to us was that the GATT board was here to be formed. So on Tuesday, we met them again, and we were introduced to members of the GATT board, chaired by Mr. Essien, and then Mr. Utu as the CEO, with other members as Ms. Susan Ohene, Samson Akligo, Abina Kisiwa, and co. And we were giving their CVs and all that. Fantastic CVs do, but that's not what we are looking at. So after we've been introduced to the board, now the board now need to sit down and put together the documentation that we are requesting for, because it is the board together with their CEO that should be able to raise these bonds through the Securities and Exchange Commission, register it at all the necessary places that they need to do, float it. Now they are looking at about some 40% from the pension side, and then 60%. There are a whole lot of people that, according to the board, are also interested in the SPV, and including some foreign investors who want to buy some of the bonds and all that. But technically, as we speak, not a peso of a pension fund has been allocated to any SPV or bond, because the bond itself has not been floated yet. But what we are saying is that the current NPRA guidelines already mandates the Board of Trustees to do some investment in local government securities, in government bonds, in FDs, and what have you. Now, one of the biggest challenges that we as Board of Trustees have, for example, is that you need to invest in fixed deposit, and by the NPRA guidelines, you must not exceed 35%, and you must not exceed 5% per issuer. Sure. Good. Now, some of these banks that went down and were merged, we have invested some of the FDs with them, and they are now with consolidated banks. It will also interest you to know that those banks that we know that are very strong, I don't want to mention them because I don't want to advertise any bank. A lot of these banks are actually not after the pension funds. They are not after the pension funds because they think they have their monies and they are running. So if you want to invest the pension funds to get appreciable return, so that you also in a way guarantee that income security for the person that goes on pension, then you don't go into some of these big banks that will give you fixed deposit rate that are even less than treasury bill.
Okay, so even before we go into the kinds of returns you're expecting and all, question is, you stated in your submission that you had requested for certain documentation to give you an understanding fundamentally of what the GAT is.
And even before
as of now, as you sit here, do you have that understanding?
As I sit here, we have asked them so much questions, and they should furnish out with the documentation. That those documentations have not come.
But I'm asking, do you? So you don't have those documentations. So presumably, then you don't know.
No, presumably we understand. The basic understanding now is that the purpose of the GAT is to help float bonds to, salvage.
Yes,
for want of a better word,
solvent but strong banks, indigenous
so
banks.
that is the understanding now. And we are members of labor, and as members of labor, sometimes we think a little bit far.
As you should do.
Yes. Now, if these 5 banks goes down, what will be the consequences for the country? What will be the consequences for labor? How many jobs will be lost? And you take all those things into
the fate of pensioners,
and the fate of pensioners and all that. So you put all these things in one basket and say that, look, if there is a way by which these banks can be helped so that they do not go down, so that as a country we do not operate only foreign banks, let us do it. Let us do it in a very right way.
Very well. Thanks for that. I'll go to you, Dr. Lord Mensah here. Now, speaking about how to ensure that these banks don't go down, picking up from where King left off, which is one of their concerns as a teacher group. I want to make reference to the statement by the Minister of Finance when he talks about strengthening these banks. I'm quoting him specifically. He says, in addition to providing capital for these banks, GAT also seeks to provide business development support in order to facilitate the strengthening of these banks, both from a perspective of corporate governance and growth. Do you think this is addressing the concerns that King is raising here?
Well, for me, I understand,
and if indeed it's sufficient.
I understand his frustration as a fund manager, and more or less trustee, and looking at a fund that you're going to put your money in. You need more information. You need more information. It's not a straightforward thing to say that you have GAT, and GAT owned by who is issuing the bond? Is it Ghanaians? Is it the board? So this needs to be clear. It needs to be clear, because if we understand investment very well, investment normally does not thrive in environment where information does not flow. It is important to look at the GAT very well. If you look at this SPV that has been set up. For me, it's not really clear for me when you look at, banks that are solvent, well-governed. If you're solvent and well-governed, I expect you to attract investor interest by yourself. You don't need any support from the government to look beyond Ghana, look within Ghana to attract funds to raise that 400 million that is being required. That is where I have a problem.
So you belong to that school of thought which says that if you're solvent, then there's no need for this.
You should attract funds by the investment nature.
They're looking at a timeline of 31st December.
We understand that, but the GAT coming in play before this document comes up and all those is a way of buying time to ensure that those banks raise money. It's a matter of giving time to extend, time to go on market, different market, to raise money. The money we're talking about here, which is minimum capital requirement, is not supposed to be borrowed money.
Which has been raised indeed by...
It's not supposed to be a borrowed money. We see it to be an equity for which the bank in itself should have interest in there. So for me, I think, I'm not getting the whole concept.
It's a matter of, you know, looking at rescuing indigenous banks. They can borrow on they can go on the market to raise money on their balance sheet. I mean, get equity shareholders out there. If necessarily you think you don't want government to lose that kind of grip in terms of shareholdings, it's a matter of floating part of your shares. So I think, you know, the whole concept of GAT is a way of, you know, more or less creating job, you know, or creating an economic activity somewhere else. But I don't expect, I mean, I don't expect the government to take business upon himself to try to set up a bond, you know, which at the end of the day, it will go on the market to raise money. No, because we are already struggling in terms of, you know, how to raise money as a country. Right. So for me, I think, you know, the whole concept, I don't buy into it. If a bank is well sovereign, well governed, well structured, have a very good standing balance sheet, that bank should be able to raise money anywhere else. And then let's also look at, you know, that GAT where Ghana Amalgamated Trust Fund. Now, every fund has a purpose. Every fund has a purpose. That is why we have fund for short-term investors, we have fund for medium-term investors, we have fund for long-term investors. Now I ask myself, the NPR has well-structured allocations that all trustees are supposed to go by, ensuring that maybe your 45% of your allocations funds should go into maybe government bond, 75 goes into that, fixed deposit maybe 25. These are well-structured allocations. So if, you know, the GAT comes up, it's more or less relatively, you know, government bond, long-term. The question will be, what is going to be the pricing of this bond? Now, trustee would like to know, you know, the interest rate that his investment will bear for his people, so that when somebody is going on pension, the person will not find himself wanting. He must efficiently allocate his investment to ensure that he returns toward the pensioners. So at the end of the day, I ask myself, what is going to be the benchmark in terms of pricing for these GAT bonds that is going to go out? Is it going to be benchmarked with treasury bills? Is it going to be benchmarked with government long-term, relatively long-term instrument? Those are the questions.
These are all matters that have to be put before the trustees.
And it needs to come out clear. More information needs to come out clear. The governance structure of this fund, you know, the
trust fund.
The fund, yes, very, very important. At the end of the day, if all these things are not clear, I think no trustee will be happy to put money in such environment. Because, you know, finance goes with information. Once there's a strong information asymmetry, I mean, I don't think trustees will be happy to have that. Right. And all these things, I know it will take some time before we settle on that.
Right. Now, speaking of that, I think you wanted to make a quick one, then I go to Prof. Okay. Yes.
Yes, it's true. Our preliminary meetings, basically, as I said, there have been some informal interaction, but the two formal, there have been two formal, the 24th of December and the one recently on Tuesday, about the percentage returns and other things. We were, before they would put the documents together, they've promised within this month all the documents. As I said, the board have just been created.
Yeah, but the pricing will be determined by the demand.
Yes.
So if you are interested, another person is interested, different
to go high.
Yeah, then to go high. So
currently, no we were mentioning 21%.
I don't foresee any good price.
Currently, we were mentioning 21%, which indeed is higher than the treasury bill. But sometimes investments that have high returns could have high risk.
They do have high risk, and that's why.
So not necessarily looking at the extreme returns also, you also look at risk. That's why I'm saying that the entire decision to do the investment sit on the board of trustees, sit with the board of trustees. And we have asked for the necessary documentation about the bonds and everything to be finished as even before it is released, so that we can make informed decision. As we sit now, we are investing majority of the over 21 billion pension funds in government bonds already.
Which in itself comes with its own risk.
And another thing is also that government have told us that with the GAT bonds, they are going to provide 70% guarantee. And then when we met them the last time, we told them that then we will be extra happy to even invest in the GAT bonds if government takes 100% sovereign guarantee for the GAT bonds.
Very well. Prof, listening to this, the 100% guarantee, that would make the workers' unions or the trustees extremely happy.
Well,
what do you make of that?
For me, that's not the issue. I'm looking at it from a public finance point of view. The moment you are going to give guarantee, it means that the GAT itself should be approved by Parliament. So those are the things.
Which was a fundamental thing you raised from the beginning.
Those are the fundamental things which was not done.
And we do know that.
We keep on doing this thing in managing the banking crisis. Again, when we form a consolidated bank. Government having 100% shares, again, that should have been approved by Parliament. It was not done. So we cannot continue to do some of these things.
But the question is, who are those behind GATS, for instance? Because if it's been set up as an entity, definitely there are certain people behind it.
I don't think we should be questioning who are the people behind GATS. It is set up by Ministry of Finance. Therefore, it's government.
Yeah, it's government.
So I'm wondering. Yes,
It's government.
So there's no question about that. What we should be asking, that's what my colleague has just said. Who is the chairman of the board? Who is the CEO, etc.? And I'm wondering, bonds that we have been issuing to support, whether we need to set up a whole entity like that to be able to just borrow money and give to banks and appoint CEOs, etc. I don't know the word to use anyway, but I think we are doing the wrong thing. We just have to do the proper thing. We should also foresee if eventually GATT becomes operational, because it will trigger corporate governance problems. It will trigger some effect on shareholding structure, as I explained earlier on. Those things may trigger some legal action, because the purpose of the GATT is to just support them. That's what we were told. But now, if you're not careful, the money that will go to some of the banks will be about 50% shareholding. Yeah. More than 50% shareholding.
Some are more than 50%.
By GATT.
Prof, that is going in a form of bond. So that will not necessarily be equity.
No. GATT is taking bond, but GATT will become investor in the bank. In the form of equity.
And that's clearly from the minister's statement.
I thought it was passed on as bonds.
Yes. And GATT will be also interested in even the board structure.
Exactly what I was talking about. Yes.
Those are the things
they may like to have their representatives on the board structure and order of these banks.
I don't have a problem if you are bringing in money, you want to be represented, but
it's not that they want to. They would have to, because if they are majority shareholders.
Yeah, it's like if they are coming to salvage, and some of them will start with more than 50%.
Yeah. So it's already more than 50%.
Exactly.
Yes. Because the banks are capitalized up to 120.
But these are the banks you are referring
to.
To make up
the banks you are referring to as well managed, solvent banks. So the approach that were used in the past, where you extended the deadline for some of the local banks, is it not better than some? This is what shareholders will be asking. So I think that going forward, corporate governance stalemate will be triggered. Issues of interest of existing shareholders will be of interest. Now, if you look at the situation where GATT is going to support some of the state-owned banks, this whole issue of recapitalization, my understanding is that it's a call on shareholders to recapitalize their banks. So why is it that government was chasing private banks here and there, but all this while government has not been able or was not willing to capitalize its own bank? Now government will now go and borrow against Section 9 of the Banking Act, go and capitalize its own bank. Of course, the shareholder, being government, is not willing to obey the rules of a Bank of Ghana to capitalize. Then you come and do all this kind of arrangement. We don't even know the actual state of those two banks.
Which two banks?
The state banks.
NIB and ADB.
ADB. In fact,
but to the extent that the Bank of Ghana says they passed the
most annoying aspect was a week or two before all this issue. ADB met at extraordinary a meeting, and they took a resolution. And do you know the shareholders of ADB? I can mention about two because I'm interested in that aspect. We have Ministry of Finance, that's government. We have Bank of Ghana, that's the regulator. So the regulator and the government met and told all of us that they have capitalized, only to realize that it was not true. Then the same regulator approved GATS, and the government is going to borrow money and bring into those banks. What kind of...
And the regulator passed the bank as having, met the requirements for that.
So these are the challenges regarding the willingness of the state to comply with the regulations. But beyond that, I am thinking about the private ones. The private one, the distortion in the shareholding structure may not be something palatable to them. And it seems to me that they might have signed the agreement maybe under some pressure. Because if you don't sign on that day, your name will be listed as part of the banks which have collapsed. So necessarily, you have to sign. But now they will be reading in between the line. And they realize that, no, there is corporate governance problem ahead of them.
Well, you are bringing in an element of, they signing under duress, but also...
I didn't use the word duress.
But there's a possibility that they knew very well what they were getting themselves into.
Exactly.
There's that possibility as well. Even though, it could raise difficult times for them ahead. In times to come, there's that possibility. But still looking at how this arrangement would go, we saw with GN Bank, for instance, Dr. Lord Mensah, that they opted to be downgraded to a microfinance. Is it a savings and loans? Sorry. So that option was also available to these banks, but obviously they didn't see that as.
The question I always ask myself is, looking at how we went about this whole processes, you realize that if we were to have about 1,000 banks in this country, we would have struggled. Because we have to pick each bank and look at how they're functioning. But for me, if you're really managing, banks, and you set a target for maybe banks to meet, and at the end of the day, the deadline comes, and they are not able to meet that deadline. Those who are able to meet it, let them go. Those who are not, you don't create unnecessary GAT and all those around and all those. 16 banks that were passed that test, they can run this country. All that the BOG has to do is that resource them very well, encourage them to go beyond Accra, go beyond Takoradi, go beyond Kumasi. We don't have to worry ourselves. These are standards. Minimum capital requirement is 400 million. Banking is about sourcing for funds and uses of what? Funds. If you don't know how to source for funds, how to attract investor interest to make up the 400, you are not a bank.
Very well. Our time is up, so I'll just take a concluding remarks from King.
Yes,
and then
that's true, but
in 30 seconds.
I know you are talking about interest of jobs and all that.
Doug, you see,
the government can still
these
find a
local
way
banks
to
that are to be supported through GAT, a lot of them could have also made these 400 million if they have had their headquarters outside the shores of Ghana. A lot of the banks that made the 400 million just had money being brought in by their parents' bank elsewhere, which these local
some
banks...
Some of them are just book transactions.
Yes, book transactions. These local banks have to try to source everything locally. It is not easy for them.
So you think government coming in to help them?
Government coming in is good. As a country, we cannot run a fully foreign bank. It is not good for us.
Very quickly, Prof, your concluding remarks on this. You have raised all the red flags in this issue.
Yes, I think I'm interested in the red flag. I raised the red flag.
Give them 40%.
But the point
Prof
is...
is on the floor.
The point is the idea to support local banks.
Yeah, it's a good
one. For me, it's a good one. But the arrangement that we put in place, I do not think is the best. What we may be seeing at the end of the day is that after 2 years, because I told you that they have a call option,
exactly,
put
and they could
option,
do that even after
that which is a type of American option. They could sell their shareholding at any time. What will be happening is that we may be bringing some investors to take over these banks in disguise very
ultimately,
soon.
yeah, ultimately those are some red flags we need to keep an eye on, but we don't have much time. We have run out of time on the show, but thank you so much to my guest, Dr. Lord Mensah, Senior Lecturer, UGBS, King Ali Awudu, President of the Coalition of Concerned Teachers, and Professor John Gatsi, Head of Department of Finance at the University of Cape Coast. And thanks to you for making a date with us this morning. We'll be back same time next week. Have a good weekend. Bye-bye.